All right, welcome back to another Bullish Bears throwing shade at Cramer session. Well, Jim Cramer versus technical analysis. Our good friend Matthew Tuttle here. You know me, I'm Jeremy. And we're not always here to completely throw shade at the guy, but this week, well, he said buy everything. And we've noticed that a lot of things are in places where we wouldn't normally want to chase them higher. In fact, we saw a lot of range setups more than anything for this week. Um, how's the weekend holiday going? How'd that go?
That went great. Always love sitting on the couch watching March Madness.
Heck
So
yeah!
can't beat that.
Now we got some family time in. Even got a little bonfire going in the backyard. Good times. Just
Nice. Yeah, no, a couple of my boys came back for a day or two here and there. That was good.
nice stuff. You see, we're all family oriented over here, and you guys on
Yeah.
YouTube, you're our family. We love you. We appreciate you. Thanks for supporting the channel, and thanks for checking us out. We'd love to get into trading technical analysis, and when we throw that at Jim Cramer, it almost always wins. Well, it always wins, dude. We're like at a 93% efficiency and accuracy rating. That's pretty dang good. Uh, Technical analysis always seems to beat fundamental analysis to the punch, as well as give more efficiency in trading. And that's the whole point of the show, is to show you that realistically you don't have to listen to any analyst out there. Be your own analyst, and technical analysis skills are enough to develop over time to where you can really have a great time as an investor or a trader, and pretty much beat the market eventually. And beating Jim Cramer is just an easy step to getting to that level of beating the market every time. So here we are trading for a living. So it's quite an extensive list of buy on old Cramer this morning or this week.
Last night. Yeah.
Yeah. I mean, he's got what, 1, 2, 3, 4, 5, 6, 7, 8, 9 things he's recommend buying, and they're all in just a really high range. And I would be skeptical to chase them higher from this point. Looking at the market conditions, we're set up for a bit of pullback and accumulation in a range. We've got a couple Fed speakers coming out today with the S&P kind of holding in a zone here. I'm putting together a video explaining how to draw all these little liquidity zones that you see on my chart, and it can be a bit confusing unless you know how to use them. Realistically, it's just a simpler way to find supply and demand on a chart, and when you identify them, the trades become really easy. You can scalp from one zone to the other. Half back is a very common rule. Apply that analysis style to anything Jim Cramer throws in the book, and it makes it easy. I'll start at the top of the list. Well, my list ended up inverted because I stacked them in from your emailer in reverse order. But here's HPK. Energy, we've been ahead of energy for going on a little over a month and a half now, and we've been dominating our trades with it. This is pretty easy stuff here with energy, and Jim said buy. Well, yeah, sure, some people did chase it this morning, but there was some profit taking that took place on that attention.
Yeah.
And sure enough, we got our 2-hour liquidity zones. And as I said, I have a video coming out soon explaining how to draw these. But mainly, I just look for big candles with wicks where all the limit orders are and find resistance and support. Trade from one to the other and back again. And don't forget the halfway mark, because that's an important part. Going into energy, of course, we got the Cramer pop from last night. Yeah, kudos. Everybody buy it. Great. But hope you didn't forget to take profit. And if you followed Jim into that trade and you were smart, you took profit right when it hit that liquidity zone, because it rejected, pulled back. We're heading for about the halfway point. This particular one, we're looking for a trade off of $16 and maybe an extension back to that 16.40 if it bounces here. Overall, though, I think energy is going to consolidate for the next few weeks in this range. Just my personal opinion on it.
You look at just about any energy stock out there, except for this one, and they look like an AI stock. Could there be wider war in the Middle East? Probably will be. Iran seems pretty pissed off, but whether they'll do anything or not, we'll see. but I think people get all worked up in the oil market a lot of times for, oh my God, war in the Middle East. I mean, there's always war in the Middle East. Maybe there's a little pop somewhere and then it ends up going away. So yeah, I mean, I've been personally taking a little bit of profits on some energy stocks because they just don't look like energy stocks right now.
Right. I agree. And whenever there's a news risk in the market like that, you never know which way this war is going to go, who's going to snap, whether it's all just saber rattling. You don't really get any clues until it's already happened. And the chart will give you a little bit of that, but it's not going to tell you what's coming out, what the Middle East is going to do. But you can find that there's some range trading happening here, and we can see there's plenty of range. So there's nothing loved more by swing traders than channel trading. When you have predictability, it's pretty easy. Resistance and support is established. Pretty easy trading. I'm expecting a little more compression into this, and looking at the weekly chart, this is where the big enchilada is for me. That's one giant double bottom reversal at the bottom of a bear trend for this particular one. And a lot of energies are looking very similar. We're looking for sector rotation. In the long run, resistance is right up here for this one particularly, right around 18 bucks. And if we can swing through that, well, we got this whole trend to go back and visit half and whole. Pretty simple stuff, just rotation. Moving on into a few other energy stocks, you'll see that a lot of them are very similar. This one's a little bit lower on the swing for rotation, but it's still got range and it's still tradable. Would I trade this one here? I'd look for some wing scalps and just kind of trade it in the range, A to B and back again. But it doesn't really move a whole lot for something I would be
Yeah,
interested
and
in.
also I don't like the volume here.
Kind of low. I've removed volume from my charts anymore because I just trade the price action, and if it doesn't have enough range, it doesn't really move a lot. I mean, 40 cents on a $16 stock, it's not that exciting to me. I like more volatility than that. So for trades, okay, you can swing trade it, get your position size in there. You can have some efficiency trading the equity, but if you're going to go with options on this thing, that's not going to pop enough to really sizzle. Looking at a strange one, we kind of did a double take when we looked at this in the live stream this morning. Shark Ninja. What's with the name on that one?
I had never heard of that one before. What's the symbol? It is
SN.
SN. All right,
And
let me look.
I mean, I look at the chart and I'm just like, well, hell, that's a nice bullish trend. It's got pretty obvious 1.5 for 1 on the daily here. It's just fairly fresh IPO. It's not been around for too long, but the chart moves with some pretty good fluidity. It works pretty well. Strange name.
Yeah.
I guess it's creative. I don't have to.
Very creative. I mean, I wouldn't buy it right here. I mean, I'm watching, through really since February, it's gone down to the 10-day and then moved back above. So, I mean, I'd wait for a pullback to the 10-day myself.
Yeah, I'm kind of looking at the same thing. And then looking at the daily chart, I mean, that's an ominous gap up to a big old doji. So, I mean, it's likely to pull back to earth here pretty soon. If you've watched anything I've done with liquidity, I always mark the all-time highs in gold, and that's kind of a big pop. So Cramer gets into it last night. A bunch of people chased price, and guess what? There was some profit taking. So if you were a trader and you were smart, you took advantage of that and took your profits off if you got long on this and got the jump on Cramer. Can I give him kudos for that? I suppose for the short term, yeah. I mean, made some traders some money. But would I buy it here and expect it to go higher? Not yet. I want to see what it is going to accumulate into in this range first.
He really only made them 22 cents. It opened at 63.50.
Yeah, so it's not huge moves. We prefer more volatility in our trading.
Unless you sold the top. But
True.
if you're watching Cramer and buying based on his recommendations, I doubt you sold the top.
Probably not. But I know a bunch of traders probably did because it's obvious on the chart.
Well, yeah.
Reaching back.
I mean, they took the opposite. They sold into the Cramer pop.
And that's kind of why we even do this, because, Cramer brings volatility and liquidity to the market. I mean, he still has quite a few followers, strangely. And it brings attention to any equity he talks about. So, if there's influence there, there's advantages for a trader to take advantage of that volatility that is simply just influence. So, can we say it's manipulated? Well, yeah, I mean, it's just people following a trend or following a leader, so to speak. Can we say that traders are taking advantage of this? And I hear this all the time as a complaint. If you've gone into like the social application that Webull provides for commenting on stocks and stuff, you'll find Matthew Tuttle in there too, by the way.
Oh yeah, I try to comment every day. I don't always get to it, but I do try.
But one thing you notice though is a lot of people who are more of a long-term investor or people who are following, fundamental analysts into a trade will always complain about day traders. Like, man, they scalped it. They're beating us down. They're short selling us. God, all the negativity that goes on in those comments, and we don't laugh at them. We just look at them and be like, I can't help but feel a little sympathy for people who are jumping the gun on that, and then they feel spiteful to go out and attack traders. But traders move the market, and investors will eventually gain. Markets usually eventually trend up. It just takes longer time. So complain about it, or I like to find the if you can't beat them, join them attitude works better. And learning a little bit about technical analysis, you're going to be able to take advantage of what the traders see and be able to make better decisions on your long-term investments. You'll be more efficient at it. So then you won't have anything to complain about. That's the way I look at it. Looking at this thing, it's likely to bounce here and give us a little retracement, but for most intents and purposes, that's not a big enough move to really be all that interesting to traders. If you got the clout to go ahead and short that and take some profit on that, cool, more power to you, but not something I like to trade. Next one he was talking about is a technology company, ALGN.
Oh yeah, Align.
And, looking at the long term on this thing, it's pretty much done its whole market structure thing and accumulated very shortly, came back, tested half the trend, whatever. Now we're kind of at a point where, in the daily chart, we've got established range to the high and low. We're right in the middle. Would I buy it here? Maybe. I want to see it break this zone here and continue a little higher first. We know where the liquidity zones are. It moves significantly enough. A few dollars on a $300 stock is good enough to make the options chain move a bit. I haven't really looked at the options on this one yet, but interestingly enough, it found some demand down here, bounced off of it. If you caught Cramer last night buying it, sure, you can see that liquidity grab right there halfway between these two zones.
Yeah, not a lot of volume on the options. Bid-ask spreads kind of suck.
Yeah, probably not the best leverage to trade, and I'll get to talking about leverage a little bit later too. But noticing that it went right for that midpoint between the liquidity zones and rejected, pulled back pretty plainly. Now we're in an area where it's going to accumulate. It's not going to be all that interesting. Again, this is going to be more of a swing trader's chart, less of a day trader's chart. And, if you just buy Cramer, yeah, you're going to be taken advantage of a little bit. But eventually this will accumulate and probably run back through this zone. Just kind of watch this area for your key for whether you're going to stay long or you're going to take profit and wait for a better setup. That's all. It's going to be making people patient. Another energy stock he mentioned, Viper Energy. This one's been on our radar for a while here. We've been scalping the tar out of this thing. I don't have any old dope on it because it was just pretty easy trend trading. We had primaries and secondaries in it. Now we're looking for more range and more consolidation. So just like all the other energy stocks, kind of looking at a point where it's wait for news. It is a news risk situation. This one's not one of the ones that is at the bottom of rotation, and even on a monthly chart, you can see it's a bit extended here. So can we stay long in this? I want to wait and see what happens with this range.
I'd like to see anything in the oils pull back before I would get in.
Pretty much. We
I mean,
need to,
if you don't have oil exposure now, I think you missed the move.
yeah, you missed the bulk of the bullishness for sure if you're not in there now. So would I buy it now if Cramer's jumping up and down and pounding the table? No. I would definitely be patient on that. And you can see the influence right in the chart here. Cramer spoke about it last night. Bing, everybody chased it. Now it's being profited a bit. So if it can't break this resistance area around 38, 39 bucks, just wait. Be patient. It'll give you a sign if it's going to go higher. Cool. I'm with the buy high, sell higher. It does happen. But wait for a break. Don't trade the setup, trade the break. Pretty simple on that one. The stock I love to short the most has actually been quite a bit bullish lately. GM. Pretty nice little setup here. We got the nice 1.5 setup. I'm looking for a target right around 48.40 for the bulls here, maybe. Where I'll probably be looking to short it. Can I say that's a pretty easy 1.5 move? Yeah. Monthly chart. I was bearish on this as being an extension, and it surely found support at about a quarter of the range expected from this breakdown. And they started talking about getting out of electric vehicles and going more for hybrids and that sort of thing. Can you really say much about the automotive industry other than the fact that it's kind of consolidating in general?
Yeah.
All of a sudden we've got like deliveries slowing down a bit. We've got sales kind of falling off a little bit. We know the consumer is stressed right now and kind of not necessarily default risk territory, but getting close, a little stretched out for liquidity. So brand new cars probably a little bit off of the shopping list for most consumers at this point. But in the next year, we have an election happening. So, I mean, it's kind of anybody's guess whether we're going to get some more boost out of that or not. It's going to really depend on what the consumer's looking like. I know GM has been kind of doing that increase on their dividend. They've been kind of giving money back to the shareholders, so to speak, and to try to keep them captivated in the stock. But it seems to me the attitude is that they're giving money away like there's no tomorrow, if you know what I mean. I think there's something in the form of headwinds in the automotive industry, at least in GM's respect, for one, the market's kind of becoming saturated and crowded. Two, how long can you sustain being able to maintain a positive margin in this market and still keep to your expectations of production? I don't know. Kind of a gray area.
I mean, for me, if you're a breakout trader and you look at the weekly chart, it broke above last year's high, and there's a lot of white space until you find another significant level. I just worry that GM, I mean, I'm not a breakout trader, but I worry that GM is not a breakout type of stock. And so to me, it does seem overextended here.
Quite a bit. And, if you look at like a lot of the other automotive stuff, aside from Tesla being beat down recently, I'm going to mute my phone real quick. You kind of know that it's going to come down to consolidation. There's going to be a few smaller companies, at least in the EV field, that are going to be consumed in this respect. And there's a couple of them on the borderline Chapter 11 type of situation. If you looked at some of the little guys, consolidation will usually kind of tighten up the space a little bit to where maybe if and only if the consumer can gain some strength in the market here, some buying power, there's a chance it can go higher and continue breaking out. But I think that's going to be more short term than long term, just in my opinion. So we'll see what happens with it. But in the meantime, you look at Cramer, he said buy it. People chased it. There was some profit taking here. We're back to a key pivot. Maybe we can swing higher from here a little bit, but it's going to be range bound, I think, in the near future. So take it as you will. It's got room to grow, but as a breakout trader, cool. But as a conservative trader who's going to trade range, I'd say there's better fish out there.
Yeah.
CSX, we were onto that last week, and we beat Cramer to the punch on that one for sure. It was pretty easy pickings on this guy. Looking at reversal, I mean, that's just a
Yeah,
classic
this looks
top
like a
pattern.
short to me.
It was an easy short last week. A couple members and I were really keen on that. We picked off this move through this liquidity zone and found the pivot. We just simply looked left. It was right here, bottom of that bar. Easy target. Now I projected the later move to go back to this angular. That angular was on my chart before it even got close. And that was your bull target melting through here. Pretty easy line. Went in for another short back to the base of liquidity here. Easy day trading, easy swing trading. Now we're consolidated. Would I buy it here? No, I'm going to wait.
Yeah, no, it's bumping up against the 50-day. Unless it breaks through to the upside, I wouldn't buy it. I'd short it.
That's it. And, looking at the short term, Cramer said buy. Everybody chased it. Liquidity was found. Here they are, selling it. So yeah, looking for a short, probably find about half this range for target, short to about 36.50, maybe an extension down here to about 36.35-ish. If it breaks that zone, we certainly got room to go and retrace this low again. So definitely a decent short. And, we were a little ahead of that. We got the bulk of that range, but this is likely to compress for a while here. So, if we see this thing start to consolidate, medium term, it may go higher, but for now, that's a pretty top heavy chart on the daily chart at least. And we've got a couple of extensions we can go even lower, like 34. So look out. Traders are going to be all over shorting this, hands down. We're already saying, hey, looks like a good short. Simple. ARM, one of Cramer's favorites. We beat the crap out of this one too. Short term, us day traders were able to scalp both the bull move and the bear move on this one. It's a pretty easy 1-for-1 up and rejection just before the top, right down. Longer term, we laid it out as a potential. Sure, it can go much, much higher, but here's the rub. One primary, secondary, went to about half with the wick and rejected way back here. When we knew this was here, that secondary was pretty obvious. Rejected there, came back to a range. If it breaks down out of this range, if this what everybody sees as a bull flag fails, guess what? Half is right down here. Look for a move maybe to about 102 if this continues south. It might become a decent short in the near future. And looking at the base range on this thing, I'm just now realizing that the right half of my chart's cut off. Sorry. There we go. So looking at the short term on this thing, that's a pretty nice looking bear flag at the base of a critical support area, and we might get a nice opportunity to short this way lower. Keep watching this range. It might give us a quick break. Cramer said buy, provided some liquidity, and it was definitely grabbed. The bears are in control here. Be aware of that if you're looking to gain from a long-term investment from this, that it's likely to get shorted. So I would definitely be throwing a little shade at Cramer for this one. I wouldn't chase that higher from here. Not to say long term, and maybe in a few years it might still continue trending up, but in the short term, medium term, we're bears. We like shorting this stuff. Let's see what's next on the list here. Next Tracker. This is a weird name too. I don't know a whole lot about this company either.
I've traded this one before. Interesting.
I mean, it's got that pretty easy measured move setup. It is a fairly newer IPO. It debuted here, in February 23. Pretty easy market structure here. It's hit the top. It got rejected. We can see a pretty broad range here from about 60 to about 50. So it's got lots of range to trade. It's an interesting one.
Yeah, I'd short it using that 54.65 gap up high as a stop.
And then if you look at the daily chart, it's pretty obvious. There's your liquidity. This is a very short-lived demand zone. And if it gets crushed, yeah, definitely a good short because people love filling gaps. That's kind of a
Yeah, that
psychological thing.
49.82 is the high of the that should be some support. If it breaks through that, you fill that gap. Then you've got the 200 day in the 44s. So
I
could be
like it.
some nice downside here.
And it's sitting right at that tipping point. So, yeah, I think we could see that gap fill pretty quickly here. Definitely one where you'd rather trade the break than the setup, but the setup looks pretty darn good. In spite of the fact that we have this nice range here, that range is pretty easy to repeat. Let me zoom way the heck out here. And you could look for that as a midpoint, and then your target's right down here about 45 bucks. Pretty obvious. So, yeah, definitely looking like a good short on this one. We can throw a little shade Cramer's way because if he's saying buy this thing and it is on his buy list, I wouldn't pound the table just yet, buddy.
No.
I'd wait for this to break, get a good short out of it maybe. If it does bounce here by some miracle, maybe it'll see a retracement back to 56. So definitely plan your trade and trade your plan. Keep your stops tight on this one if you're going to trade it either direction. But for now, it's looking more bearish than bullish, that's for sure. Lows. Builders were great to a point. We were looking at some possible rotation for builders, but it was short-lived. We started looking at the rotation to run higher. This was certainly a nice gap up into this, but then came down and started testing range. So then Cramer gives it the kiss of death here. It says buy it.
Well, something's going on here. If you look at Home Depot, it looks the same. I think from a shorting standpoint, Home Depot's got some better levels because you're dealing with the 50-day. But something's going on here if you look at some of these stocks. And yeah, and some other retail stocks as well, which may or may not be related, does make me wonder. Like, you look at a Costco, you look at a Walmart, you look at a Five Below, which just got its ass kicked. I was looking at some of this stuff this morning. I wrote about it in my trading newsletter. Maybe the market is, because we know that these economic numbers that say how strong the consumer is are all cooked, and they
Absolutely.
always just get revised down. Maybe some of these stocks are trying to tell us something. Who knows? But yeah, I don't like what I see out of Lowe's. Again, I'd rather short Home Depot because of the levels, but I
Right.
think there's something weird going on here.
Yeah, I can see that. When you start seeing companies do a forward split, especially at a particular time when the consumer is in danger of becoming weaker, the economic headwinds are kind of there. Even though they're saying it's been robust, sure, that's stuff that already happened. We can see that obvious, That is looking a bit top heavy on the daily chart, and when they start to split like this at a high, it doesn't necessarily mean they're going to become bears, but it's going to become more liquid because a lot more of the retail traders are going to find themselves in the market now at lower share prices. So this looks a bit top heavy to me, and Walmart is a pretty good litmus test for the economy. Everybody shops at Walmart, regardless of what walk of life
And
you
if you
have.
don't shop at Walmart, you shop at Costco,
Pretty much.
and that doesn't look so great either.
I shop at both. I like to get all my staple goods from Costco in bulk. Having a full house certainly is advantageous, and I'm not the only one. But then when I go and look at Walmart, I kind of see that as where I tend to buy more stuff that's just stuff that I don't need a big supply of. Basic staples. Milk and eggs and sour cream and
I
stuff like
shop
that.
at Costco through Instacart, which actually is doing pretty well.
And that's where the logistics companies are starting to be a little more appealing to the trader is in the people delivering it, because it's very convenient to use Instacart, Uber Eats, and even using Lyft and stuff like that to get your stuff delivered to you. It's that kind of market. So yeah, there's some benefit there, but over time I gotta wonder if this is going to become a big pen it on a daily chart for Walmart, or if it's going to be a top and we run back down to where we were starting to see early you know early part of the year or late part of last year, where we start to see a retracement back to about a halfway point on this trend. So yeah, I mean, there's definitely something starting to happen. We're definitely starting to see some rotation in the consumer market respect, and Home Depot, Lowe's, and Walmart and Costco. Those things are kind of going to be the canary in a coal mine, so to speak, as far as economic stuff goes. But yeah, top heavy on Home Depot. Not a lot of room for home improvement. I'm actually on the opposite side of that. I'm getting ready to take advantage of lower prices finally to do some home improvements. you know, there's two sides. But effectively, in general, the masses are seeming to kind of take a little liquidity out of that sector, so to speak. And also, you look at a lot of these high worth individuals that run these companies are selling shares. It's kind of obvious. The writing's on the wall that something's pulling back, or at least it's a good time to take profit. So, yeah, we definitely have some other mentions. I was kind of looking at an overseas shipper, and ZIM popped out to me. I took advantage of this reversal, and I'm long now and just killing it. But that's kind of the thing where you start seeing the local economy get a little bit dried up. The world economy is still pumping, even though we have a port that's basically shut down on our end, and some turmoil for shipping, oil across some certain parts in the Middle East there. Things are tightening up, but the bulk of that goes to the middleman, the delivery guy, the guy delivering your food on Instacart, or the guy delivering your oil or your bulk goods. So I'm looking at shippers, and I'm seeing that rotation really start to take effect now. What do you think?
Yeah. So Zim is one that I trade in and out of every once in a while. I mean, that's looking interesting from a just pure shipping standpoint. But I really love the Instacarts, the Amazons. I mean, I think more and more we're just going to be getting away from actually going to a store. I don't know what it's like around you, but I did need some Advil fairly quickly, so I had to go to a drugstore. Everything is locked up. It's a pain in the ass. I would
Yeah,
rather sit there on Amazon and do stuff.
yeah, it's brought right to your door, and you don't have to worry about that crap. I agree. And when it comes to finding rotation in shippers like this, if I remember correctly, we were long on all this stuff. We saw this rotation once it started to break above the 10-day or the 8 period, as I use. We took advantage of this, and then right at the top, Cramer said, "Buy it." He gave it the kiss of death, did us all a favor. I even said that. I said, "Hey, maybe he's doing us a favor. Maybe it's time to take profit and come back to this after a pullback." And well, it gave us a beautiful pullback. Now we're starting to see possible continuation in that. If it starts to break above this blue line I have here, which is about the mean of this upper end, about 1245, 1250, you start to see this one pick up. Watch all the other shippers. They'll probably do about the same thing. So products are still flowing through the economy. It's just kind of taking a different route. There's a couple more middlemen in it. And for convenience, if time is money, you don't like to go around and waste your time waiting for a cabinet to be unlocked for a damn bottle of Advil. So,
Right.
you
Pain
know,
in the ass.
so effectively, the goods are still going to keep flowing, regardless of market conditions. But I guess the service industry is going to kind of take shape in that for one, and then shippers. Well, I guess you can consider Instacart a shipper. you know, it's a last mile shipper, but it's
They just delivered food for me about an hour ago.
exactly. So definitely start looking at some of that rotation going into the shipping. The convenience factor is still there. There's still some strength in the economy. Energy's kind of at a plateau. Maybe if less people are leaving their house to go and buy that bottle of Advil and they're just ordering it in, consumption of energy or gasoline and diesel for your vehicles kind of tends to go down. So demand goes down, price goes down. Pretty simple economics. Looking at our YouTube channel real quick, I've got one saying, is that HLM? I can't read that. Basically just saying Cramer versus technical analysis sounds like a high versus the market. Catchy video title. Thank you. Appreciate that. Anytime you guys feel like commenting on our videos, you're welcome to. If you've got a ticker you want us to look at, we love being Johnny on the spot, on demand, live to you to answer questions.
And we don't have a soundboard.
Exactly. We don't waste time with a bunch of...
And we don't make up words that make no sense.
Exactly. Although I will admit I am published in the Urban Dictionary for a few words personally. Some nonsense words that are just funny as hell.
Is one of them?
No. I've got far different stuff. Like back in my racing days, I used to kind of mess with people and be like, yeah, your stuff is stockified. I'm like, what's that mean? Well, you didn't bolt any aftermarket parts on it, so you're within regulation, but you modified what was there. So I invented the word stockified. I'm in the Urban Dictionary. Go look it up. So, but stuff like that. There's some other more derogative words I've invented in there that aren't as kosher, but they're funny. And if you follow the user that posted stockified, you'll see a few of them. Slow mover is one I could mention. That's kind of a funny one too, but some fun stuff. But at any rate, that's about the extent of my funny words type of thing. I don't do that in the stock market, obviously. So no soundboard, no frills, just straight up dope. Give us a ticker if you feel like wanting us to look at it for you. We're happy to. And technical analysis will pretty much trump anything Cramer says about anything you ask him about. Hands down. I've seen some of the callers on the show. I watch it occasionally, and I can kind of tell the inflection in their voice is that they're absolutely green when it comes to trading anything. So, kind of respect that from our end as far as reaching out to the guy. His heart's in the same place ours is. He just wants to help. I get that. But listen to some of the callers. I mean, it's just, you listen and it's like, there is no such thing as a dumb question, but some of the questions to seasoned traders are very obvious. So in that respect, find yourself, even as an investor, go and look into the world of trading and technical analysis, and it will greatly help you make better decisions about your trading, as opposed to calling some analyst and saying, hey man, look at the stock for me, and then a bunch of soundboard stuff goes off and some jokes are made. But realistically, technical analysis is going to win every time.
Yep.
All right, then. Well, thanks for joining us this week. Don't forget to like and subscribe. And above all, we really appreciate you telling your friends, because we're here to do this as a service to you, and we appreciate being able to provide that for you guys. And we also appreciate the support and being able to do more. So if you like us, please tell us about tell your friends about us, and bring us an audience. The bigger the audience, the more we'll do this. We'll do this every day if you're up for it. So. Thanks again, guys. Have a wonderful week.